below. right? That would be your
Yeah.
first step, that blue line.
Look for 9:31 and then set it of the day.
Right, 9:31, and boom, set it right there. I even try to do a little customization with my line. See, sugar hunt begins right at 9:31. See the top?
Bro, you added a name to the start, bro.
I'll be having some time, man.
I can see.
You see the line. Look at the top of it.
Bro, Sugar Hunt start.
Gotta just, I seen it. I see you could do it. I'm like, okay, might as well. A little customization. You could customize even these sugar cane fair value gaps too, right? So like that. And then I kind of make it smaller. And then I could see exactly what day it's from inside.
Mad, bro. I love that.
Yeah, bro. So, nice and neat, nice and neat. So that's our first. Monica, what's our second thing? I mean, pretty simple enough what we were just talking about.
After you said the line, you will look for the fear value gap. And
Right,
once you find it, that's when you're gonna create the sugar cane.
right. So then we start looking for bar 1, bar 2, bar 3. Nothing there, right? Start again. Bar 1, bar 2, bar 3, nothing there. Bar 1, bar 2, bar 3, nothing there, right? Just keep counting, just like how I'm doing. That's all you got to do. Just scan it, scan the field, do it like that. Okay, now you get to bar 1, bar 2, right? Nice space. Now on this bar, you should already be even, I don't want to say predicting, but kind of anticipating, okay, once we close above here, this is going to be your sugar right away, because you see the big space that bar 2 creates. And remember, bar 2 is usually, not always, but usually the largest one out of the 3, because that's the one that creates the space. By the time you get bar 3, you know the low of bar 3, high of bar 1, sugarcane fair value gap. Now, good job, you guys. Sarah and Monica. All right, let's see. All right, Aneska, what's the third step?
So now you're gonna wait for the time slot. So between 9:50 to 10:10.
All right, perfect. See, right, we're just waiting. We're just following what it's given us. Okay. So again, it looks like this week is a trending theme, right? Where we're getting a little bit more play of our sugarcane early than our window. I'm not saying this is the only time you can trade. I would say what I've seen is this is the best time to trade. Even here, there is an entry. These are just a little more advanced type of entries, right? But you see in the end of the window, our other gap comes into play again from previous day. So it looks like this week, for whatever reason, we weren't really using the current gap, we were using the previous gap. There's been days where we see we're using the the current gap in the window, right? So these are the things you got to just take notice of. There's different ways it's going to form and different behaviors for that same thing. Same exact thing is just now acting weird. Like, you guys know, what if you guys had a friend and then tomorrow you go to school or work, they just start acting different? You got to know how to kind of deal with them that day, right? Maybe you stay away from them. Maybe, you try to cheer them up, whatever you decide, but you would have to recognize. So it's the same way when you come to trade. Just know it's never going to be the same. Even the exact same thing and same technique is going to show up different, right? That's why you want to master it inside and out, know exactly what you're looking for. Okay, so let's say we don't do any trade here because this is more complex. Right, so no trade there. But for an example of what we want to see, we're going to look at this section right here. In our window, what we would love to see is activity like this, right? Right before the window or right in the window, we break above, right? And we get a nice retest. Even this one here, nice retest here, retest here. I wouldn't say this really matters because for me, when I get in a trade here, here, and because I see 7 points, I would just try to put it at the midline. I like the midlines of like anything. The middle of it seems to be good, right? Like this one dipped here at the top, this one dipped in it some more, but couldn't really dip past the middle. And again, all of that is just from research and what I've noticed. So coming right here, retest, fail to break the middle, or even, I mean, fail to break out of it, but even better, fail to even touch the middle. That's a sign of upward strength coming in. Take that buy. Good to go. Stop loss right here. Look for previous high to get taken out, right there. Then you look to the left. If it keeps going in your favor, look more to the left. Previous high here, previous high here. You see a previous high there. Okay, once it goes there, and you see it start chopping around, maybe just get out. So you get out right there, right underneath this red bar. Boom. Risking 10 to 11 points for 30 points or so, 28. That's good. You only need 10 points, right? From, let's say from this right here, 299, you only need right here. From there to there. That's how much you need to make a living from trading. Literally, right here to right there. Not far. Everything else is extra. And you can see more times than not, you're getting way more than 10 points, right? But 10 points, one contract, $200. You don't need nothing crazy. You get like that last trade, we got 30 points almost. So that would be $600. One contract. Risking 200 about to get 600. That's good. 200 for 200 is the bare minimum. 200 for 400, that's good stuff. 200 for 600, that's a great trade. You got a 3-to-1. For every dollar you risk, you're going to get back 3. That's excellent. All right. Let's see. Let's do it again. I mean, all right. Let's switch up. Who want to go first? Yeah. JJ, I'll leave you for last this time. Hopefully there's something in the window.
All right.
You can explain. All right. Aneska, do you know the first thing we do? What's our first step?
All right, so first step, you draw your line at 931.
931, yep. Perfect. And in a second. I think. Let's see. Monica or Sarah, which one of you guys want to talk about the second step?
I can go.
Okay. What do we do for our second step?
We locate the sugar cane.
Locate the sugar cane. Perfect. And how did we locate the sugar cane?
We look at the 3 lines, and if the middle of the 3 lines isn't is the top isn't touching the bottom, then that's our sugar cane line.
Right. Yeah. So it's basically the 3 bars, right, that you're looking at. And then the lines are coming from the low of the high bar and the high of the low bar right here, right? So the top part of this bar and the bottom part of this bar, that's where you get those lines. And then that space, that's where we draw in the box, right? Like this box is basically the space right here. And that's our sugar cane. So now let's go through and kind of find it. Let me see if you can help me try to find it here, Sarah. We got bar 1 right here, bar 2, bar 3. Is there any of them in there? No, not there. Let me know if you can find it then, Sarah.
Oh, the sugar cane, I see it.
Yeah, let me see. Can you draw on the screen?
Yeah, control.
All right, so draw it in for me. Let me see. Yeah, so that's one of them. Remember, you're looking for the first immediate one, right? So this is bar 1 right here. I'm giving you a little, that's bar 1, this bar. So if that's bar 1, this bar would be, right? That's bar 2, right? And this is 3. So then you take the high and the low.
I
Yep,
just placed those on mute.
yep, there you go. So
That's a
that,
small gap.
yep, pretty small, right? But then like I said, don't worry about how big or small, as long as you can locate it. All right. Put it right there. Boom. Good to go. Now, how do I explain this to you right here? Again, I'm giving you guys a little bit more advanced information. This is the gap here. That's 100% correct. I'm going to show you something else that could also be the gap being bigger. Show you. Let's see if I can find. If there's a space between these bars right here, which you can see there's a little space right here where the wick is overlapping. That means you kind of ignore this wick and you bring it down to the body of the candle. If there wasn't a space, you wouldn't do that. You would still keep it at the top. But just a little bit more advanced information for you. If you draw it up here, right? I'm going to show you why it's going to come into play. Right now, we'll leave it there, right? But remember, I told you that. All right, Monika, what's the third step?
The third step is that's when you have to wait for 10-10, and then you set another line
Right.
for the other window. That's where you're gonna trade.
Right. So 950 and,
Yeah, 950.
and 10. Boom. Now, look at this. Doing this, we are nowhere near the sugar cane, right? But JJ, what are we looking for the fourth step?
All right. So, in order to go over the retracement and all of that, right?
Well, not necessarily. That's what you're gonna tell us.
All
What we're
right.
supposed to be looking for.
Now you're gonna see whether it breaks above or below and look for it to retrace. So like how it broke below, now you would look for it to retrace above or retrace to like the sugar cane and see if it bounces back or breaks through.
Right. Do a little rejection, right?
Yes, sir.
Now, when we look here, you see nothing. But watch if I pull this down to where the body is. Look how we get that little retest right there. Not a lot, right? But that matters because then you could say you're looking for the short. You enter here. Hold on a second. If you enter here, stop loss about right here. Remember, everything about above about 10 points is extra. So your 10 points is about right here. And I would say you would get to at least maybe this much. Because for me, when I'm in the trade, I would move my stop here above this green candle. And I know once I would see it go down below the green candle, I'd move my thing. So let's see here. That's about 40 points. So again, almost 10 points for 40. 10 for 40, that's 4-1. That's another good trade. But you see how if you don't know that little piece of information about the gap, you wouldn't even be considering that trade, right?
Yo, bro, I got a question real quick.
What's going on, bro?
All right, so when you're like operating a trade, as soon as you hit 10 points, you would move your stop loss to 10 points to
Yeah,
lock in to 10 points.
yeah. Or if I'm thinking I'm gonna stay in, bro, then I just move my thing to break even.
Oh,
But
okay.
right away, I'm just looking for 10 points. I'm not looking for nothing extra right now. Yo,
Alright.
I used to do that same thing. But why I'm doing that, I just feel like, bro, I've been letting the trades run, and we all got to get a little satisfaction point. At least they can know something to shoot for, you know.
Uh-huh.
So, all right, yeah, let's go for this one. But yeah, that was it. You good now?
Yeah.
All right. So for the second window, look what's going on. Same kind of activity, right? We were above, but we broke down. Now we are retesting it from below. And same type of reaction, right? Little retest. And we're just showing that we can't even pass the beginning of the gap. Whereas here, look, we're at least pushing, or here we close into it. Here we can't. Remember, these candles are just telling us information. We went up here, we went up from low to high, low to high, low to high. As soon as we got here, we started going from high to low. That to me is a signal for a short. I take a sell there. Stop loss above here. I'm looking for this low or this low. I get this low right here. Green bar, so I exit. Again, 20 points. 400 bucks. One contract. You don't need a lot. If you get a move like this, that's amazing. But you don't need a lot. All right, and the sugar will provide you a lot some days, for sure. Some days I've seen this thing hit the sugar cane and I'm in the trade and I'm the one who exits. It just goes for majority of the day or it just never comes back. So you'll get there. All right. Nice little entry right here. I, for one, really like this entry for multiple reasons. But this right here is basically textbook to what I'm showing you guys to look for. Break below, retest, fail. Break below, retest, fail. That's textbook. You guys would have had a field day. So notice we've had 2 days before, basically Monday and Tuesday this week in this week that we're looking at. You would basically have Monday no trades, Tuesday only if you are using and a little bit more advanced to know you should use the previous sugar cane, you wouldn't have a trade, right? So that's an advanced day Tuesday. Today also a bit of an advanced day too, but it's just a little piece of information that you now know, right? Because this trade here, watch this, if we also had it, right? If you also had this up here, you also wouldn't be getting this trade. So you see how just knowing what to draw, where to draw, how to draw it, just a little important, little details.
Yo, so when do you know when to expand the sugarcane?
It's only when the wicks are overlapping on the bars, right? This wick right here is overlapping with this wick. You see that? There's a little space in between this bar and this bar. So this is the gap. But then when you see this little overlap, you're like, oh yeah, the body of this bar is the start of the gap. This, because remember, wick and wick overlapping, that doesn't basically exist. Like those places don't exist if you really think about it, because there's no candle body there. This is like a graveyard. So from here, this doesn't even exist because they came back down with another wick over it. And then now we have a body. Right? So still a little bit more advanced, but Gavin knows. These wicks, and you guys should actually know this too, these wicks only mean that price went up, came back down. It didn't stay there. Price went down, came back up. This is where the real, price movement was done and respected. So yeah, bro, just always look for where the wicks are overlapping. Wick on wick is just like, man, just think of like a dead zone.
Okay, gotcha.
Yeah. All right, guys. Oh, what's this? Oh, yeah, something I drew before. Let me get that up. Again, we're gonna have to slide through this one because I don't see much. But again, first thing here, line at 931. Second thing, sugarcane fair value gap. Again, we get such an early play, right? This is kind of what we want to see. It literally gets created, breaks above, retest right away. Boom. In our window, where is 950? Right here. 950, 1010. We're getting no retest, nothing. So again, no trade there. So we got 2-3 trades this week so far, if you're just trading this strategy, and a little bit more advanced. Let me see. Yeah, we're nowhere near. Let's go to Friday now. And again, this should be nice and boring. This should be boring for you. You should be like, oh yeah, I already know this. I already know these steps. I already know what we're looking for. Why we keep going over this? Good. That means you can't forget it. Right? First step, 931. Second step, find the sugar. Now look how crazy this day looks. So you really want to know what you're looking for. Let's take off these drawings for a second. It looks all jumbled up. It looks all crazy. You might miss it. But you know right here, when you put your line, that's 931. Immediately I start to count. Bar 1, bar 2, bar 3. I don't know, so let me just draw the lines. Oh, hold on. Let me draw it with this other thing. This is the high. And this is the low. And we just kind of went over this, right? There is a space in between this bar and this bar. So we know, whereas the gap high could be there, it should actually be up here. And there we go. That's our sugarcane fair value gap. Right? Bar 1, bar 2, bar 3. Small gap again. When we have the small gaps, what are we looking for? I'm also looking for them to make a play on one of the other gaps. But I'm still, you can't, you still have it for today. I'm just keeping in mind, like, either we're going to try to drop to the nearest gap, right? See, I scrunch my screen. And when I'm looking, I don't really see some above. I would more so say I see some below. So maybe they come down here, then do a bounce, right? Because this is so small. All right. We got our sugar. Now we wait for our time window. Ten. Look at this. See this? This is where we're gonna learn a lot right here. We're here, chopping on it. This right here, you should take as intel, right? Take as information. We're kind of having a rough time right now in the market. We're kind of moving choppy, like even if they do the move, there's a good chance they might try to come stop you out. Look here, they try to stop this out. If you put your stop loss here, you got stopped out. If you trailed your stop loss here, you got stopped out. They're trying to push. So we break below. We come back. We retest. We look like we're failing, right? So maybe you enter here. And you put your stop loss above the sugar. What happens? Does this one work? Almost. Nope. Comes right back. Stops you out. That's going to happen. 100%. I can guarantee you that. I can't guarantee you anything else, but I can guarantee you this. All right? Will happen. What do? Just jump back in and go the other way? No. Just be patient. Just wait. Wait for things to play out, right? We're trying to break below. We're trying to break above. We're breaking below. We can't. We're trying to break above. I like this break above right here. Why? Because now we took out this high and we didn't get to, but we tried to take out this high. We only got to about right there. All right? But But now this is really higher. When I see us trying to reject back up here, right? Now we're just watching the price action. Broke up, took out this high, big sweep. This might be news or something. Who knows? But when we start coming back down, you see some red. I keep seeing 1-time retest, 2-time retest, 3-time retest. When you start seeing this, I would honestly just leave it alone. But if you're really keeping a cool, level head and you want to try it again, you simply can. This would be your last trade for the day or for the session. But you could easily go short right there again. Stop loss, same place above. And look for the same exact trade. That would just work right after. And this 10 points that you lost here, you just made that back because you just made 40 points. Right below this low right here. Or aiming for this one. That's 40 points. So now you made back your 10 plus 30. All right, you take a loss. That's cool. Just be calm and wait for your next opportunity, right? The window's not over. Everything's not done. Wait for another sweep, right? Look, we made a low, we made a high, then we swept the low, swept the high, and boom, come back down. Right? A little bit more advanced kind of things. But you guys know, because think about this. When we're taking our trades, like say we're selling, remember, we're looking for previous low, previous low. When they are going to make a move, usually it's going to be after they take out a previous low or after they take out a previous high. So here, when they take out this previous high with this big wick, that's a sign, right? And especially if we can't keep going up, and then look how we close perfectly back into the sugar cane. It would be a different story, right? If I'm looking at the market like this and there's no drawings. When I have my drawings, I can see that price is respecting my area perfectly. Look at the midline. Even this bar that was supposed to be bullish couldn't go bullish above this little midline. All right. You guys got any questions on that? Or all good?
No.
No.
All right, so you guys should be flowing. Listen, if you guys are all good, let's see. I don't see any here. Still more complex. All right, the last thing we're gonna do is go over how can I look and make sure that I'm trading with the side most likely to win, right? What does that mean? Which side is strongest right now? One second. So when I get on my chart, right, and it's early, for example, today, let's say I got on right here. About 9:20, 9:15. What I like to do is I will go, remove this. I'll go on what they call higher time frame. Simple as that. I'm on a 1-minute chart showing you guys all these things, how to enter. How we're gonna get the main idea is from higher. You can start from a month, right? It all depends how you want to start. And then if I look at the month, it's a big green bar. So I would already be leaning this month to try to buy more than sell. Because naturally, if it's going to be a green month, that means we're going to get more buying opportunity, right? Those same 1 minute bars that are showing you green and red, this is telling you the same information just for a month. For last month, look, we mostly kind of went up, but came back down. Sell. So we're red. Month before, we were buying. This month, crazy month. Doji bar. We started here, went down, came right back up. Right? So then if I drop from the month, I could go to the week. Remember, candles, same information. Now just for a week. So if the month is going up and my week is telling me that it's also looking green, I'm definitely mostly only looking for buying, right? Now I can go down even more to the day, because remember, if my month is buying, my week is buying, and my day now is looking like it's buying with the green bar, smooth, I'm definitely gonna only be buying today, right? And if I add that to my sugar cane, then I kind of know which direction to look for. Because if it's going to be mostly buying, I really want to see it break above the sugar cane, right? Then retest. I'm not more so inclined to take the short if it happens. You guys understand that? It's like if, let's see. Oh, let's see. Okay, like a train. These are like the front runners of the train, the front trolleys. Where these are going, that's mainly where price is going to go, right? These bigger ones, or they're like big brothers or big sisters. What they're doing, the smaller ones, or I won't say definitely, but more likely to go and stronger in that direction. So now, if I know the day is going up, what if I drop to an hour and I see that there's going to be buying for an hour? Wouldn't that make it even more easier to try to pick out a trade, especially if I'm looking during my time window? Like this is a 10 o'clock candle right here for an hour. We can see what happened. We opened here, kind of ticked up, came back down. So let's put a little box around this. Area right here. And we're gonna drop down to our 15 minute. Well, let's do the 30 minute first. We get these 30-minute candles. This is our open, right? Same open. This is our sugarcane gap. And right here at 9:30, what are we doing? We took out this high and we took out this high. Do you remember just before when I said when they're gonna make a move, usually they like to take out a higher high, right? And create the highest high. This is where this was higher than here. This was higher than here. They took it all out and now they made the new high. Now they start selling away, right? And we already seen with our hour formation that we're gonna start selling. So now, 30-minute, zoom in, 15-minute. Look at that. Look how we're just right on our gap. A little choppy. We're not really going anywhere. But we know our area and how we're looking to sell. All right, maybe back down. Let's go all the way to our 5-minute. You see how the candles are changing, but all that's happening is when I'm going from one time frame to the next, they're just dividing up the information into smaller bits and pieces that I can then look at it even more, in detail. because this 15-minute is telling me the same exact thing as the 5-minute. It's only there instead of, right? Every one of these candles is going to become 3 candles. So this green bar right here, this is how you kind of do the higher time frame test. Let's put a box around this bar. And then let's drop down to the 5-minute. Look at those bars. It's these 3 bars right here. 1, 2, 3. See how that changes? That same 1 bar is now these bars. If I know what I'm looking for, I'm just taking the higher time frame as my main direction, right? As like when you're driving, this is what's giving you direction. You're going for the next 90 miles, you're just going straight. You're not making no right turn, no left turn. You're not going south, you're just going north, right? This is your direction. Your entry would want to be down on something like the 1-minute. Now, this is your 1-minute. Look at that. All these candles are still only equal to those 3 candles just now. But it's just showing you all the little piece of movement. We didn't even have a sugar from today. Let's go 931. Boom. Let's see where it's at. 1, 2, 3, it's right here. Look for the window. And I'll kid you guys not, hold on, 10, 10. Okay, so we could take almost a trade here right away. When we flip here to our 5-minute, we can see we're having bullish bars form right here, right before our window starts. Look at this. This was a bullish bar. We're also bouncing out of this previous sugar. So when I drop down to the 1-minute, what kind of activity do you guys think I would be looking to do? Clearly, I would be looking to buy, right? Because I'm getting very large 5-minute bars to the upside right here. And I see a breakdown, break above, retest, buy right there. Look at that. Just from looking at the higher time frame, directional bias, this can help me confirm or deny whether I want to get in this trade, stay in the trade, hold the trade, just do a short trade, right? Because when I see the 5 minutes start to wick out, then I know, hey, just take a quick scalp. Either way, I'm just looking for 10 points. This trade right here gives you 14. You would have been good to this previous high. Let's see. So do you guys kind of understand what I'm saying? Maybe not so the easiest to understand, but it should be. It's just there are bigger time frames showing you stronger conviction, stronger directional bias. Where we're pushing to for an hour, that's really strong. I drop down to this 1 minute, boom. I'm taking this trade. Let me show you guys this. And then we're out of here because I actually took this trade. Also, just a little bit more advanced for the early entry. But I don't want you guys to think we're not going to be doing what we talk about. Can you guys see the screen here?
Yes.
Okay, so you can literally see this is my trade from today. This blue arrow here, I entered here, which is this bar. And then I exited at this high, right? Because I'm only aiming for higher high, 10 points. This was like more like 20 something points. So I got a little extra today. Grateful, good. Why I took this trade is not only the sugar cane. Yes, it is the sugar cane because we created it here, pulling back into it. But do you guys see that red box? Zoom in a little. That red box right there is a bearish fair value gap. When we close outside the bearish fair value gap, or seem like we're going to close outside, I buy. Because if it was bearish here, we should have went down and dropped. And here, when we pulled back, we should have really dropped. We didn't. We just stayed there. We tried to drop again. That was just a little more retest. Back into here. Bounce. So getting more and more advanced, studying a little bit more and more, adding everything up with the sugarcane fair value gap, you guys are going to have a great time. And like I said, I'm doing exactly, maybe just a little bit more, practice than you all, but you guys can learn and do the same things. It's the same concepts. Right? So yeah, guys, I just want to show you all that. You guys should be good now. If you guys
that was from today, right?
Yeah.
What time was that?
Right here at about 9:50.
9:50. All right, bet.
Right there, right as soon as the window starts, right before the window starts, that's usually when I'm taking my trades, bro.
Oh, I see it. I see it on the 2006. Even though you're on the minute,
yeah,
I can see like the gap and everything.
Send me a picture.
All right.
Because I haven't even looked at the tick chart in a little while now. They don't got good tick charts on freaking TradingView, so I always gotta have another computer open.
Yeah, I think you gotta pay for it, right? You gotta pay for the tick charts on TradingView.
Yeah, bro, and then they're not even good.
Oh, for real?
Yeah, they look crazy, bro. Like mad spaced out and everything. I don't understand.
Yo, and then what is that little like indicator you got at the bottom?
Which one?
Like the bars. Is that like volume?
Yeah, I don't know what this is, honestly. I don't have this. They just put it on my chart.
Ask the same thing because you didn't talk about it. Oh, now it's gone.
Yes, see, they just put it there. Don't worry about that. Chart. They like put one indicator on there. We don't need any of that. The only indicator we're gonna use is like maybe an EMA, and that's when we get more into it.
Cause yo, I'm gonna send you the picture right now on the tick chart. It gives you the inversion and it gives you a second entry.
See what I'm saying?
Off the EMA. But yeah, I'll send it to you.
Yeah, bro. Add it all up, guys. Add it all up. But yeah, guys, if you guys got no more questions, just give me a message. I'm here to help y'all. Put in a little study time. You guys got this.
All right. Well, see you.
All right. See you guys later.
All right, Terrence. I'm gonna reach out to you in the morning, okay?
Yeah, man. Sounds good.
All
All
right.
right, bro. Enough love and respect, man.
All right, bro. You already know, bro. Enough love, man. Bless up yourself.
Yeah, man. Later, everybody.
All right. Bye, bro.
All right, guys.
All right, guys, look, good morning.